This is our Forex blog for April 20th, 2012. This is the newest currency meter we released this week, which allows you to statistically compare the dollar, the yen, to every other pair on multiple time frames. We have the real-time trend on the top. Obviously, red is the downtrend, green is strong. Underneath that, we have the daily, weekly, monthly trend. And what's beautiful about this is, for one, it works on a range chart. So during times from 3:30 to 4:30 right here, there's more activity. The bars are moving more. You have more bars. It gives you a lot more intuitive sense of what the market's doing. Secondly, you can adjust this to fit your own style of trading. I have it set for, very fast, real-time settings. And basically, you want to see, patterns like this with extreme weakness followed by almost no strength. The daily trend's down, the weekly trend's down in the yen. Obviously, you want to find a strong currency to buy it against. The euro, the Swiss, the pound, the pound's strong on all time frames. Those are the ones you want to buy against the weak yen. So taking a look at the euro yen, here's a 5-minute chart. You can see it pretty much trended up all day. You're focusing on buying it. Here's the type of chart I use, a 6 pips per bar chart. Let me bring it up here. And you can use our intelligent trailing stops to get in and out. You can see in here at 26, out at 56, nice 30 pip move. In here at 53, out at 86, another nice 30-something pip move. Our upper containment bands tend to contain price, and I spend about 30 or 40 minutes every night for my own trading doing Fibonacci analysis. This is a Fibonacci retracement level, light gray. Here's another Fibonacci retracement level, and the dark gray levels are fib profit targets. And I'm pretty good at doing fibs. I've done them a very long time. You can see that's the high, pretty much the high of the day in the pound dollar. Major resistance, I already showed the euro yen. Here's the euro dollar. Major resistance for multiple hours. Came up and touched my next level to the pip. Let's just see. This one never got hit. Never got hit. Fibonacci retracement level. Major resistance. Really had a hard time getting above that. The high of the day in the pound yen. Dollar Swiss, the low. Found support, doesn't go below there. And when it's underneath the lower 2.0 white band and you have a fib profit target level or fib retracement level, tends to be the maximum low or high of the day. This one never got hit, and neither did that. But most of them that did get hit was for the most part, high or low of the day. So you don't have to spend 30, 40 minutes every night doing fib analysis, and it's kind of a part art, part science. It's very hard. A lot of traders, even after 6 months of classes, never could really do it themselves, so I just decided to do it for them. Who doesn't want to save 30 minutes a day having to do that? So, basically in a nutshell, the dollar also was weak. You could buy the euro dollar today. Let's take a look at that. You can see basically buying every dip, buying the dip. When it's up near the upper containment band, there's less odds of this trend continuing. You can see it, went back above the band and failed. And that's one of the reasons why I use the range charts. On a range chart, if you were to buy this dip right here, and there's certain patterns on range charts that are conducive for short-term trading. One is when you have a strong trend like this and you get 3 to 5 red bars down, the first green bar, you buy it when it goes 1 pip above here, right here, 31.95. You can put your stop right underneath the low. And when it's starting to go up, you move your stop up here, and you can see you literally risked, or the end result of this was a losing trade, but it was less than 5 pips. You have 3 bars down, 1 green bar. You buy it when it goes above, that bar right there. And it always helps when you see incredible momentum on the way up. The pullback has what I look for is visually half as much weakness. In this case, it's got 1/4 the momentum to the downside to the upside, and you can see this. When it did break out right here at 88, went all the way back up to 09. Went up 20-something pips. And even if you got out of this trade right here at break even, or if you held on, you can see the real-time momentum right here has an incredible intensity. You might move your stop up, right underneath break even right here. I oftentimes, if it goes sideways like that, just stick the stop right underneath the lows, and your 8 or 9 or 10 pip original stop now quickly becomes a 4 or 5 pip stop. In a lot of the trades, when they don't work, you lose, a small number of pips. The Swiss, very strong today. Dollar, very weak. So obviously you want to sell the dollar Swiss. And anytime a currency is underneath the hourly and comes back up and touches it, this is a very high probability place to sell. Our counter trend signals, if you get a sell signal and the trend's down, it's pretty much a no-brainer type trade. And here's what this looks like on a 6 pips per bar chart. This is kind of a pullback right here. If you waited for the trailing stop to get in, you're in at 28, out at 09, 20-something pips. A lot of times on the range charts, these wicks above the bar's high tend to be reversal signs. So if you see extreme weakness, this is a perfect example of the up move having about half the upwards momentum as the previous down move had. And you always want to draw your fibs intraday too, just to get an idea. I like to sell at the 50 or 62%. But if you get into this trade, you can always put your stop right above this bar's high, start trailing it down, and very quickly it's at break even. And here's my fib level. It's underneath the lower band. And it also happened to come down to the 1.382 fib target of this last wave. So what I typically do is if I'm in this trade, and more than likely I would have gotten short right here at 91.34, my stop a pip or two above the high. As it's coming down, sometimes I exit part of my trade if I want to go make coffee or something. I'm not usually trading at 540, but if I was, I'd probably exit half the trade there. A lot of times I'll leave the computer monitor for 5 or 10 minutes, set my stops, and come back and look at it a little bit later. If I come back and it's down here and I haven't got out of half my trade, I usually will. And when it's underneath the lower band, typically if it goes above the previous bar's high, I'll get out. So I would have got out of the second half of that at 05. The first half somewhere down here at 99. Here's the CAD. You can see incredible momentum came in to this currency right here around 553. The yen is the weaker of the two because the daily trend's a lot weaker, the weekly trend's weaker. Therefore, you want to buy the CAD yen coming up to 6 o'clock. So here's 6 o'clock right here. 550 is on this bar. It is hitting the previous week's high. There's a 20-day moving average. That's why it's has some selling right there. When it breaks over this bar's high right here at 21, you're in. You always want to draw your fibs just to get an idea. Most of the time, I will exit. If in this case it's stalled at the first fib target, so I force myself to get out of it. And typically, I will put my stop underneath, the sideways range bars like this. And then when it comes up and hits the 1.618, I'm out. Most of the time, in my experience, probably 70% of the time, it does not go above the 1.618. So I would have probably gone out in the first half at 33, the other half maybe at 40. My average exit somewhere around 36 in this trade here at 21. That's a 15 pip point.